Manishi Raychaudhuri with us, Chief Executive Officer at Emmer Capital Partners. Manishi, good morning. Good to have you with us here. So if an institutional client calls you this morning, Manishi, for a view on cables and wires and says, well, guess what? You got Ultratech entering the space and I own Polycab and I own Havells and I own KEI. What would you tell them?
I will tell him two things. Number one, as Finance 101 tells us, unrelated diversification, non-core diversification is always bad news. And I mean, if the promoters of the company decide to set up a new company entering this business with their own money, that's fine.
Manishi, from the point of view of cable and wire companies, Ultratech we'll talk later.
Right.
But for the incumbent players in the space, sorry, go on.
Right. That's the second bit. And secondly, when a company or a group which is cash rich and has the proven ability to raise cash in the capital markets, when they enter a new segment, that's always bad news for the incumbent players. This particular segment is, it had been for the past several years a benign oligopoly. So when you have a large group entering this sector, it creates a degree of, it obviously creates a degree of uncertainty, and that is what we are seeing now here. Many of these companies that have today declined about 9 to 10%, they were also trading at rich valuations. So a very small piece of bad news is enough to prick that bubble.
So better to get out on day one of the fall, Manishi, if one is an investor in cables and wires?
It would obviously depend on the kind of position that one has. Over the longer term, over the next maybe 3 to 5 years, this sector is definitely attractive. But what investors should do now is to very carefully assess the kind of valuations that they're paying for, get out of the relatively expensive stocks, may stay invested in the relatively cheaper ones, and also the kind of niche market leaders. We're actually seeing this not just in this sector, but in all across India. It's the market leaders who are able to command pricing. It's the market leaders who are able to gain market shares. So I think for the foreseeable time horizon, that would be the strategy to play.
So Manishi, now back to the broader markets. We've had a very nasty knock. We knew it was coming, given the kind of one-way rally, the valuations. It's just that when it comes, you feel so unprepared, and there is pain. Do you think there is more pain that lies ahead of the Indian markets, or are we closer to the bottom for the large caps and the mid cap and small caps?
Honestly, it does not surprise me. I have been saying this since late last year, and on your channels also, that India is overvalued. And at that time, in late September, early October, Indian valuation premium compared to Asia ex-Japan was about 90%. Now that has declined. Nifty 50 or BSE sensex, the frontline indices, their valuations have declined. 1-year forward P declined from 24 to 25 to about 20 right now, which is closer to the long-term average. Having said this, I must still point out that earnings estimates are still declining. Over the past 6 months, I think both small caps, mid caps, and the frontline indices, EPS estimates, consensus EPS estimates have declined about 10 to 12%. I personally think that in certain sectors, it's likely to continue for some more time. There are some sectors, let's say IT services or some of the other exporters, where I think the currency has been a tailwind. So there has been a bottoming out of those earnings estimates. But it's difficult to take a call on the market bottom right now. I would possibly be in a wait and watch mode. There are two variables I would look at. Number one, I talked about the earnings estimates on an overall basis bottoming out and beginning to recover. And second, the currency. We are seeing some good signs there also. The dollar seems to be moderating, but I would possibly, be in a wait and watch mode for these two variables right now.
Okay, all right. Hi, Manishi. Good morning and good to see you in. Manishi, but, India has gone through a period of underperformance, right? I mean, if you compare MSCI India with China, with, the developed markets as well, Do you think that from here on, give and take everything, the valuations, the economic activity on ground, the accommodative stance from the RBI, the kind of measures we've heard from them in the last 50 days or so with regard to the rate cuts, OMOs, forex swap, and now, they've been mostly accommodative. Do you think India has a good chance to outperform from here on?
I think there are a couple of variables, domestic variables, that have changed for the better. First, as you rightly pointed out, the RBI's relatively more accommodative stance compared to even about a month or two ago. Second, this injection of money into the hands of consumers, which we saw in the budget, 1 trillion rupees of tax breaks. It would obviously take time for the beneficiaries to spend more, and for that maybe another quarter to get that reflected into corporate top lines and earnings. But at least these are variables that have turned for the better. But remember that at the same time, there are some other variables that have turned for the better in some of the larger markets in Asia. For China, DeepSeek changed everything. It focused attention on the Chinese tech companies and their ability to reduce the tech usage costs across the world. At the same time, China also expanded their consumption support program in January. Their own version of Cash for Clunkers program was expanded significantly to include smartphones, wearables, etc. So it seems that China is now increasingly focusing on consumption support, and that would get reflected in the meetings that are coming up. As you might be knowing, between March 5th and 6th, they have the 2 sessions meetings, which are possibly the most important trigger to look at, as far as the Chinese markets are concerned. So, while domestic variables have changed for the better in India, some of the other options in the Asia ex-Japan markets are also increasingly looking more attractive to the foreign investors. And I think, we have to balance both sides. So it's for the next 1 quarter or so, I would possibly be in a kind of a wait and watch mode on India, as I, kind of said just now.
All right, Manishi, we will, no, absolutely. Wait and watch seems to be broadly the theme out there. Let me just quickly take a look at, if things have changed around at all for these cables and wire companies. Nothing at all. KEI is down 10, Polycab is down 10, Havells is down 8, RR Kabil is down 11. So these are steep, sharp knocks which are coming through at this stage. And Ultratech is down 4. So Ultratech started down, with a 1% cut tentative, but is down a full 4%, and is the #1 volume-led loser at this stage. So that's what's coming. So I mean, the mood in any case is not all that great. And on top of that, negative news flow. I mean, you basically get hit twice with twice the impact than in sort of up markets. Manishi, thank you very much for joining us. Great speaking with you. Appreciate it very much.